Hey everyone, welcome back to Corporate Decoder, the place where we crack open the corporate world to see what is really going on beneath the surface. Today we're diving into Sanmina Corporation's latest report, and let me tell you, it is not just about numbers, it is about what those numbers mean for the company's future, and trust me, there are some juicy details we need to unpack. Before we start, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below, and I promise our discussions there are just as juicy. So, what is the big news from Sanmina Corporation? Well, on the 8th of December of 2025, they revealed some significant plans regarding their executive compensation for the upcoming fiscal year 2026. This isn't just pocket change we're talking about here. The real meat of this report is about their fiscal year 2026 corporate bonus plan. Think of it as a roadmap for how the company and its top employees will be rewarded. They've set specific targets for revenue, operating margin, and cash flow from operations for fiscal year 2026. Now, here is the kicker. If they don't hit a minimum performance level on these targets, nobody, and I mean nobody, gets any bonus, nada, zip, zilch. This is a pretty bold move, showing they're serious about performance. Your bonus isn't just based on the company doing well overall, it is a three-legged stool. First, to raise the company's overall performance against those main targets like revenue and profit. Second, to raise your individual or your specific division's performance. And third, there is your base salary. Your target bonus is a percentage of your salary, and for the top executives, that percentage can be quite high, ranging from 90% all the way up to a whopping 187.5%. That means some executives could potentially double their annual salary in bonuses if everything aligns perfectly. That is a lot of skin in the game for those at the top. But here is where things get interesting from a control perspective. The compensation committee, the folks in charge of this bonus plan, they've kept all the cards in their hands. They can change the rules of the game anytime. They can increase or decrease the targets, they can increase or decrease the bonuses, and they can even make discretionary adjustments to an individual's bonus. This gives them immense power. They are essentially saying, we set the goals, we measure the success, and we decide the payout no matter what. It's a structure that aims for accountability but also gives the committee a lot of flexibility and, dare I say, discretion. Now let's look at Sanmina Corporation itself. They are a pretty significant player in the manufacturing and logistics space, known for making complex electronics for various industries, from medical devices to defense. This bonus plan is really about aligning their top leadership's financial interests with the company's operational success. When you set ambitious targets and tie significant bonus payouts to them, you are essentially telling your executives that their success is directly linked to the company's bottom line. It's a strategy to motivate and retain talent, but it also puts a lot of pressure on them to deliver. Their stock symbol is SAM, and it is traded on the Nasdaq Global Select Market. For investors, understanding these bonus structures is crucial because it impacts profitability and cash flow. If the company hits its targets, they'll be paying out more in bonuses, which reduces net income. If they miss them, they save money on bonuses. But that signals potential performance issues. Essentially, this 8K filing is a preview of their performance expectations and how they plan to incentivize their leadership team to achieve those expectations. The fact that they've explicitly stated that no incentive compensation will be paid if minimum performance targets aren't met is a strong signal of their commitment to results. It's a risk. Reward structure designed to drive performance, but also to protect the company's financial health if those performance goals aren't met. This isn't about rewarding participation, it's about rewarding actual measurable success. Looking at this from a Warren Buffett style analysis, you want to see management with their own money invested. And here, their bonuses are tied directly to company performance, so that is a good sign. However, you also want to see a clear, sustainable strategy. This bonus plan suggests a focus on operational efficiency and financial results, which are core tenets of a healthy business. The potential downside is if the targets are set unrealistically high. It can lead to burnout or even ethical shortcuts to meet them. Conversely, if the targets are too easy, the plan loses its motivational power. The committee's broad discretion here is a double-edged sword. It allows for adaptability, but also opens the door for subjective decisions which could be less transparent for external observers like us. We need to keep an eye on how these targets are set and how the discretion is exercised in future reports to gauge the true health and direction of Sanmina. The market will be watching closely to see if these incentives translate into solid financial gains in fiscal year 2026. Alright, that is our breakdown of Sanmina's latest filing. What is your take on these bonus plans and what they signal for the company's future? Do you think this structure will drive success or create undue pressure? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.